G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. So the topic for this video is the stock market. Just going over its ugly day it had yesterday and going over some company earnings like Tesla, Google and Ford. And yeah, getting overall sentiment of where we're sort of heading in the stock market, looking at the charts and seeing, depending on what circumstances are going into the end of the year, what can happen for the stock market. So, first of all, we have the fear and greed index, and we have reached fear, back into the fear category at 41 there, as you can see, and I'll just show you a timeline of that. So we'll talk about this the other video, and we will at 63 when we spoke about this fear and greed index back in mid-July. We come back from the trough 38 fear and sort of trickled up, from the start of July to mid-July, and I thought we were out of the rut and we're going higher. We're looking optimistic, and then we had, going into sort of the end of July now, and we're going back down to fear. So this little rally it's come to an end. I could show you the momentum of it. Talking about why we're sort of starting to come down. And I think mostly to do with the political uncertainty at the moment, and Joe Biden dropping out, Kamala stepping up. I think there's a bit of uncertainty there. And just, I think when these companies start reporting earnings and they're starting to come in negative or missing expectations, especially the top ones, then we'll see a slowdown in the market, because the Mag 7 make up the majority of the market. And this will just keep going lower, this fear and greed index, as, the market heads lower and sentiment's not quite what you think it is, because it's emotional market at the moment. It's how markets move. It's not necessarily the narrative. It's price leads the narrative. Okay, so that's that. Jesse Cohen, tweet by him: the worst day for tech stocks since October 2022. Tesla's down 12%, Nvidia's down 6.8%, Meta 5.7%, and Google 5.1%, and the NASDAQ minus 3.6%. I think it's the worst day for the NASDAQ since October of 2022. Yeah, it says it there. So really bad. That's the heat map. It's looking over the companies, and the biggest reds are the Nvidia, Microsoft, Apple, Google, Amazon, the top 5. And not looking very pretty for those ones. But it's mostly red across the board. Some are mixed, some are green. The healthcare sector, utilities is all green. Diagnostics is fairly green. Consumer discretionary is sort of mixed, but every other sector is mostly red, down. So, not looking quite healthy there for the session. Right, so capacity letter. Breaking Tesla stock extends a decline on the day to over 6% after reporting Q2 2024 earnings. The company reported EPS of 52 cents, below expectations of 61 cents, on revenue of $25.5 billion, which bet expectations of $24.4 billion. Tesla now has $30.7 billion of cash and $1.34 billion of quarterly free cash flow. All eyes will be on the earnings call, which has proven to be much more important than the headline numbers. And then you got the earnings call there, and you can see a big decline on the 15-minute candle. But the day you can see it's just a big, push just up, and then before the earnings, and then the earnings comes out, bang, sells off. So not looking good there. for Tesla. But so looking very bullish, and then it's gone back down to where it belongs. Tesla. Also, we have Ford stock falls over 10% on the day after posting massive earnings miss. Ford reported EPS of 47 cents, which was a whopping 31% below expectations of 68 cents. Ford also posted $44 billion of automotive revenue, below expectations of 44.8. Warranty issues were the largest contributor to the miss in quarterly earnings per share. Brutal quarter for automakers. So, big decline there for Ford as well on earnings. As EPS absolutely, wow, 31% below expectations. That's just really, really, really bad for the quarter. So, 10% fall. It deserves it. It didn't hit the mark. So, yep, it's down a lot. And we'll talk about Google earnings, which is Google parent company Alphabet delivered a disappointing quarter despite a solid performance in its ad search segment and cloud business. So its revenue was $84.74 billion, which bet expectations of $84.16 for the quarter. Its earnings per share was $1.89, beating expectations of $1.83. And advertising revenue was $64.62, which slightly bet estimate $64.5 billion. Cloud business exceeded by $10 billion in quarterly revenues for the first time, contributing significantly to the overall revenue increase of 14% compared to the same quarter last year. But the disappointing thing was YouTube. Ad revenue fell short of expectations of $8.66 billion compared to estimates of $8.95. So not too bad for Google. Did pretty well, but it still fell 3%. Bigger company, it's going to drop as big as Ford or Tesla. So it makes sense, but it did quite well. But yeah, it's pretty stagnant. We'll see going next quarter what happens, but those were the results, the earnings for these companies. So we're in the charts now, and we're looking at the SPX, S&P 500 index. And as you can see, after the gap, we closed all the way down here, 54.27. So a big drop for the day, which is quite bad. And we're back in this ascending wedge, if you want to call it that, which sort of starts from the August period, July, and going in August, and then declining at the end of 2023. And we had this bottom here and drawn from this low, April 2024, and now sort of approaching it again, this level. So we had a fake out here above it, and now we're coming down to the bottom of this wedge. So yeah, bad day for this SPX there. The Nasdaq had an even worse day. The tech sector, 3.5% decline, and it continues to grind higher. But you're looking at levels like this level here, notable, 18,460. If we break that, we're sort of in trouble. And then I think once we break below this level here, almost 17,000 essentially, that will be when the market starts its further decline, and we'll head to even lower levels around the $14,000 mark, where I'm expecting to head. I think if we really go into recession, it's a 25% move down. Quite simply, that would happen, or we can go even lower. It depends on severity of the recession, okay, and how far it extends and how long it goes on for. It could go on for a year, it could go on for 6 months. We don't know exactly what the length could be, depending on the factors. But you've got to watch these levels very closely for these indexes. We also had transportations. Had this triangle here. We had a down day of 1.2%. I'll just show you closely on the 3-day chart. My favorite time frame. And from this top week, 2021, the top to the bottom, 2022, end of the year, came up to it here in August 2023, November 2023, and we touched again in June, and so it had breakout here, which didn't quite break these highs, but now we're coming back into this triangle, and we're heading back into it. So whether that was a fake out and we're heading lower, I've got these levels marked out, 13.5 and 12,000 respectively. So we'll see if those targets get hit. Yeah, the transportations index is quite interesting to look at. It hasn't been doing as well as the Nasdaq and the SPX. So yeah, might lead the charge this downturn. It's more of a it's transportation, so it's more just sort of risk off than the Nasdaq and S&P. So yeah, let's see what happens there. We have the Russell, the small caps, and they had a pretty bad down day, 2%. Break out of this diamond pattern here and extend it up higher. But are we going to come back down? Have to wait and see for that one. It's not really clear chart there. The Nasdaq versus the Russell, and this rising channel starting from early 2023, and we're rising up and up and up, and now we're starting to break down below the channel. Is this the start of a decline? I don't know, but it looks pretty nervous there for the Nasdaq IWM. SPY growth versus SPY value. Risk off. So risk on versus risk off. And have this parabolic curve. We've touched it here. Started here in January 2023, January 2024, April. Now we're sort of coming back to test it again. Quite interesting there. We have semiconductors versus the staples. So the highest risk sector versus the lowest risk sector. And it makes up the S&P 500. And since October 2022 at the low, it bounced again, bounced, and been slowly curving higher. Is this a false break? Will we go lower down to these levels? Thing that I see notably is as price goes higher like this, a bit more neater, you can see that the MACD is going lower. So that's called divergence. So the momentum is starting to slow down. We've had an overbought level with a nice wide divergence. So we'll see that really trickles down into price and really affects prices. This momentum keeps going lower and lower and lower. Have to wait and see there, but it's very interesting to see that we're starting to slow down momentum and we're getting this big sell-off now. So I'll skip over these ones. The volatility index, quite interesting. We had a massive spike up, huge day for the volatility, 22%, massive. And we've found a base here at 11.5, and we're starting to shoot up, as we did back here. The markets decline when this happens. So volatility spikes. It's risk. It's a bit of a downwards volatility. What it's measured. So these are the drops in the S&P. I'll just quickly show you what I mean. So I'll use this. So every time we have these big spikes up. So we had a spike up here that the S&P sold off. We had a spike here. We had a sell-off in the S&P, as you can see there. Spike again. We had another sell-off. We had a spike again here. And we had a sell-off in the S&P in orange. So you can see this sort of inversely correlated there. We had a spike again. And we sold off even more. We had a spike here. It sells off. And you can see it happens every time. Spike here. It sells off. Spike here. So slowly, gradually goes up as the S&P goes down. A big spike. That's marked bottom for that section there. We had a spike in April 2024. What happened? It sold off, and we're having a spike again. And we're getting a sell-off, okay? So that's just showing what happens there, okay? Every time the volatility goes up, it's bad for the stock market, as its drawdowns. We had HYG minus the VIX. So this sort of takes out volatility for the corporate bonds. So, A-graded bonds, high-quality corporate bonds, and you can see it's fairly correlated to the stock market. It moves a bit funny, like it's sort of up and down, up and down, up and down, and very big swings. It's very seeing bond market moves, but as you can see, they're fairly correlated. We had the bottom here, bottom there. We had a bottom, we had a bottom touching this trend line, touched it there, and we marked the bottom for the S&P. It came back down to this trend line again, and the S&P sold off as well. Okay, and now we're ejecting from this level, and the S&P starting to sell off. So we're sort of trading sideways here. As you can see, it sort of is sideways action for the bond market, and the S&P's been going higher. Okay, as you can see in orange there. So quite interesting to see. We're sort of diverging a little bit, and you can see this big divergence on the MACD as price is going sideways and MACD is going lower. So that's started to sell off from this resistance level. We've touched a few times going back to December 2023, and we're starting to sell off and heading back down to this trend line again, okay? So this will put downward pressure on the stock market. As the corporate bonds, the bond market is very, very good leading indicator for things like, because it's bigger market than the stock market. It's much bigger. So, yeah, that's that information. You can also look at, I want to quickly look at the inversion, the yield, uninversion. And, yeah, I'll just take off the S&P for a second. And we can see we've been uninverted. Also say we've been inverted since July 2022, right here to now. This is 748 days, so over 2 years of inversion. Now we'll start to uninvert. Okay, so been in this period for a long, long time, not looking quite healthy. Looks like the bond market does lead the stock market, and once we invert and uninvert every single time, there's been a recession. So it's only a matter of time before things normalize. And this is 10-year minus the 2-year. So this 10-year rate's going higher than the 2-year rates. And yeah, you see it's starting to break out of this triangle, as I've drawn here, consolidated. And we're breaking out aggressively to the upside. And the zero level is where it has to break through to uninvert. So I'll just show you real quick what I mean by it causes a recession every single time. Let's bring it out more closely. And we'll zoom out to the monthly. Okay. So the monthly time frame, so there's the red shaded areas are the recession areas. And every time, we enter, we invert, we go below the zero line. All right, we trade sideways a bit, and then we uninvert. As you can see there, what happens? Recession. And you go to this period here, it did slightly invert, go below zero line, and then it shot back up. And we had a little recession. Oh, the stock market dropped a lot, but a very big spike, but it was very short-lived. As money flooded the system, and people got stimulus checks. We inverted here. Okay, go below zero line, and we uninverted. What happens? Recession. Same thing here. As we inverted, go below zero, we uninverted. What happens? Recession. That was the 1991, and it's going to go back to the 80s. But as you can see, we inverted, we went below zero, we went back up. Okay, we broke back above zero. What happened? Recession. We broke down again. All right, inverted. Then we uninverted. What happens? Recession. Okay, so it's inevitable. It's going to happen very, very soon, in my opinion. This could come back down, though. It could be, inverted for a longer time, and then going into the end of 2025, we could have recession. We don't know. It could be earlier or later. We have to wait and see. Don't know exactly the timing of it. It's going to be the difficult part to predict. I'm not going to put predictions on the timing of it, but it's going to happen nevertheless. Just have some cash on the sidelines ready to deploy in the stock market, crypto market, depending on what you prefer, as this uninverts. Okay. And let's look at some individual stocks real quick. Let's show you the Microsoft on the monthly time frame. Because I like going on the monthly because it's really, the bigger the time frame, the more accurate your analysis becomes. And as you can see, we have a line going here to here. So we have a high and a higher high. Meanwhile, the MACD is going lower. So we have a high and a lower high. I'm about to cross, which could signal the top for Microsoft until we get back to this parabola curve, this red curve here, which acted all the way back to December 2012. So it's been a very neat line. It goes all the way back there. It's been sort of trading up against it. Will we break this upward sloping trend line and go lower? See, Apple on the monthly time frame. Let's get rid of sessions. So we have higher high, okay, compared to that one back in 2021, December. We had that sell-off. We had the MACD go overbought, right? Then we're starting to go lower. The MACD momentum is going down. My price is going up. It's only a matter of time before this line here that broke the highs will come back down. In my opinion, we'll go lower. Break this trend line here. That's just what's going to happen eventually. Don't know when, but it's not looking quite pretty. And you can see this wick looks pretty nasty on the monthly time frame. This is long-term investing, guys. So it's very important to look at the longer-term trends to zoom out and see what's really happening. So if you zoom in too far, you get caught in the noise. This is really what the big moves happen. So as you can see, we have a high down here, okay, a higher high, and an even higher high, a big massive parabola. And you can see it follows it pretty closely. This parabola is going to be about to be broken, and these lines here, from the high. With the MACD on the monthly, you've got a massive overbought signal here, a lower MACD, and even lower, slightly lower. Third MACD mountain, looks like a mountain, about to cross down. So this momentum is slowing down, goes back to 2018. So this is quite bad. See that in the chart. And will we break and have a significant decline? I don't know how big the decline's going to be, but it's going to be very, very nasty because it's gone up a lot. You can go from this bottom here to now. Bottom in 2018. Now it's 4,400% increase. So big 4.5. Big move. 45. X return on your money in 6 years, just about. So big moves, and will we come back down? Because it had a huge run, especially this past year. It's been quite big. Nvidia, it's been the hot stock of the year. It's done very, very well. So 2024, you can see its move from the start of the year to the top is 186%. So quite big. 3x return on your money in a year for a tech stock, 3 trillion market cap, quite massive moves. So we're going to see this parabola, whether it holds or it breaks, which I think it's going to break inevitably. Just got to be cautious. Okay, don't go too heavy into this one. It's already had its big move. You missed out on it, but we could go higher. We don't know. Google. We talk about Google. And go back to the monthly. And you can see The MACD overbought here back in 2021, December. And we've got a lower high on the MACD and we've got a higher high on price. So that's not looking good. The monthly time frame, a big divergence. So yeah, not good. Same as Amazon. High, a lower high, but we've had this massive overbought level here. It's gone lower, then it's gone lower again. So 3-drive pattern, which is it's a stronger divergence signal to see further downside. Okay, so don't get too optimistic. I'll be staying out of them. Just personally, stay out of these stocks. If you've got in earlier, congratulations, but take some profits. Right, get out. Because you can see I was covering other videos that we have CEOs and insiders selling their shares at an aggressive pace. Got Jeff Bezos has sold over $10 billion worth of Amazon stock. You got Jensen Huang, I think over 300 million now. Just other people doing the same thing. Other insiders selling. Warren Buffett sold a fair few Apple shares earlier this year. During the Berkshire Hathaway meeting, he mentioned that, and he can't find any opportunities in this market. It's overbought market, overvalued, according to his Wilshire to GDP indicator. So he's showing that he can't find any deals at the moment, which is quite concerning. He's sitting on $189 billion of cash. So the guy knows something's up, and he's waiting for the opportunity to buy. It's just not now. It's just lower prices, and you'll see him buy, and there'll be people tracking what he's doing, and it'll be a good indication because the guy knows a lot, and he knows his valuations very well. He's the best at it, one of the best investors in the world. So I wouldn't doubt him at all. So that's it there. So, yeah. All right, guys, I hope you enjoyed this video, just going over the stock market, going over NASDAQ, S&P, their big drawdowns. S&P biggest loss in a single day since October 2022. We had earnings. We talked about Tesla, Microsoft, and Google. Tesla, Google, and Ford. Earnings, apologies. And yeah, we talked about the charts, talked about the yield curve, how it's uninverting, signaling recession's coming soon. Don't know when. And then looked at some charts, looking at the volatility index, looking at the bond market, looking at individual stocks, and on the monthly time frame, zoom out as far as you really can. You can go to the yearly time frame, you can go even further, but just give us a good indication that the risk-off sentiment is starting to happen, and showed you SPY growth versus SPY value. And yeah, it's getting to a pivotal turning point, in my opinion. And as we really got to look at the Fed's the most important thing. How they respond to the economic data going forward. And they see unemployment start to rise even further, and we trigger the SARM rule. That is really where I go, yep, we're in a recession. SARM rule is very, very reliable. Goes back on my chart since the late 40s, and it's been very, very accurate. So yeah, that'll be the determination for me. We're into a recession, but sit on our hands and wait in the meantime. Assess the data coming in, and whether the Fed starts to cut rates when they see economic data weaken, as the probabilities are most likely to be September. We'll have to see how we go there, but yeah, just sit on your hands and wait, as it's very uncertain times, election period as well. As I mentioned, we got Joe Biden dropping out unexpectedly, Kamala jumping in, so that sort of uncertainty of the candidate running there. So the uncertainty of the elections is another factor to consider as well. But I think that'll resolve itself pretty quickly. It's really just the Fed. Follow the Fed and the balance sheet, and pay attention to that. Pay attention to interest rates and the numbers coming in from the job market, inflation numbers, retail sales, PMI manufacturing data, services, and yeah, they're the main things to look at to make up your decisions. We have, I think, GDP growth coming out tonight. So I'll do a video tomorrow explaining the GDP numbers, the US global economy, the US economy. Look at we slowing down economic activity, global domestic product. Be very, very interesting reading to see. If it's getting a below expectations reading, it'll really signal that we are slowing right down, entering a recession. Okay, so yeah, that's tomorrow's video. Anyway, I hope you enjoyed this one. I want you to smash the like, comment your thoughts below, subscribe to stay updated, and I'll catch you in the next one. Cheers.